Sinn. I'm a veteran portfolio manager and trader with a focus on the mining sector and gold and silver. I'm doing a presentation today entitled Why Gold is the Greatest Bull Market in the World Right Now. And I'm sort of asking a question, trying to answer it. Why aren't gold stocks and mining stocks in general stronger than they've been in 2020? I just wanted to say a few things. I hope everybody's having a good extended 3-day weekend. It's sort of a nice time to flip through some charts and think about things when there's less noise and less going on in markets. You can see at the bottom of your video screen there's four widgets, and the third one over is a chat box where you can submit a comment or a question that you may have. So I invite you all to do that. I will get to questions at the end of the presentation. So now I'm going to do my presentation. So first of all, I own shares in a couple of the stocks I'm going to talk about. I own gold and silver. This is not investment advice. I'm not advocating for any of you to buy or sell a stock that I talk about. These are my opinions based upon my analysis. And it's your money and your responsibility. So the question is, why is gold the ultimate bull market right now? Well, I have a few reasons why I think gold is the ultimate bull market right now. It is the only major market that I can find right now in this moment that just closed at a more than 7-year closing high on a weekly basis above its 50-day and 200-day moving averages. And here I just did a very simple gold chart. I got rid of everything except for volume and price. The chart pretty much speaks for itself. This is a bull market, folks, and there's no other way to view it from my vantage point as a veteran, trader, and so why is gold such a good investment right now, and why is it in this bull market? Well, number one, a lot of people don't own any gold. So a lot of the investors who have been buying Amazon and Walmart and all of these big mega cap stocks, they have had no interest in gold for many years, especially between 2009 and February of this year. What's the point of owning gold when it goes up maybe 10% on a good year when you can buy 100 other stocks that double or more every few months, right? And that obviously we've seen a paradigm shift here in 2020. A lot of it has to do with COVID-19, but I would argue that actually the paradigm shift was already in progress, and this crisis has just served to accelerate the time frame. Also, gold is benefiting from the massive monetary stimulus that we've seen since February of this year, which has really accelerated in the last few weeks. I mean, the M2 has jumped by 12% in 2020. And this is a chart, hopefully you can see it fairly well. This blue line just went parabolic, and that's the M2. So money supply is expanding at an alarming rate. And the M2 is a pretty strong positive correlation with the price of gold. And you can see that according to this chart. So that is the actions of the Fed, the Treasury Department, and governments around the world. There's a lot of other central banks that are also embracing extremely expansionary policies here in 2020. It's all a major tailwind for gold. Gold becomes much more attractive to investors when the price of money is extremely low or even negative. And that's exactly the environment we have right now in the world. And everything indicates that central banks and governments are just going to be using fire hoses of cash, basically all made on a keyboard for as far as we can see. And this chart, I think, is excellent. It shows the expansion of dollars out there in the world, and it's usually leading the dollar currency. So basically the dollar against the euro, the dollar against the yen, the dollar against the pound sterling. It's usually leading how the dollar trades by about 2 months. And this is actually one of the reasons why I think gold futures 2 to 4 months out are trading so far above the spot price. Nobody wants to be short gold with all of these dollars being poured into the world. Okay. And that makes a lot of sense that we're probably going to see the dollar get weaker over the coming months, because that's what the Fed wants to do. They do not want to have a strong dollar, and they're creating swap lines with every other central bank in the world. They're doing whatever they can to try to get this strong dollar to back off a bit. And obviously the reason why the dollar has been so strong is because of COVID and the panic that has been caused by COVID. Another sort of favorable thing for gold is all of these mine shutdowns. And there's a lot of talk about physical shortages. It's kind of a controversial subject. One thing I'll say for sure is people want physical gold. That's blatantly obvious. They're on eBay, or they're calling dealers trying to get gold maple leafs, gold eagles, and they're willing to pay really high premiums for that physical gold. Is there a shortage of it? I don't think there is. It just depends upon the price that you're willing to pay. And obviously that's one of the reasons why gold has been trading so well here the past month or so. Also, gold is viewed as a timeless store of value. It's a safe asset in an unsafe and highly uncertain world. There's really nothing quite like gold. There's silver, there's platinum, but none of those metals are gold. Gold is a timeless store of value, and it's something that human beings for thousands of years have always been attracted to. Gold is under-owned, relative to other asset classes. I mean, it's a lot of investors don't have any gold exposure, zero. And even if they own, even if an average investor put 10% of their net worth into gold, the gold price would be way over $2,000 an ounce, way over $2,000 an ounce. And that's not even, that's not even making their gold exposure at parity with their stock and bond exposure. It's just putting 10%. And that would cause the gold price to go well above $2,000 an ounce. So these are all of my reasons why I think gold is the greatest bull market in the world right now. And you don't have to take my word for it. You can just look at the price action. So why aren't gold mining stocks trading better with gold over $1,700 an ounce? And this is a question I've been pondering for the last week. So gold stocks are still stocks. You just need to log into your brokerage account, or you can even do it on your cell phone. Press the sell button. You just type in the number of shares and the price, or you can do a market order and press sell. Boom, done. It's very easy to sell stocks. It's a lot harder to sell physical gold or silver, right? It takes a little bit of work. It takes a bit of effort. So gold stocks, because they're stocks, they've suffered from this crisis. I mean, you just need to look at a few mining charts to see what happened in March. A lot of them dropped huge in a matter of a few weeks, just like all the other stocks did. And when people are afraid to take risk, they're fearing further losses. They're not going to buy stocks, even if they're gold stocks, because they're just fearful and they're looking at price action. And we're all, as human beings, wired when prices are dropping. We're sort of hardwired to not want to do the right thing, which is to actually buy low. And we saw that in the last few weeks, right? We saw that across all stock markets. Also, gold miners have been suffering from COVID because a lot of their operations have been shut down or compromised. And there's a lack of clarity actually when things are going to get back to normal. We don't even know how the exploration season this summer is going to look. I mean, is Canada going to be wide open again or not? And also, are companies going to be able to raise the capital they need to actually go out in the field and do work? There's a lot of uncertainty around that, and we've seen that in the junior mining shares. And a lot of juniors have had a relatively tame bounce from the lows. And I think the financing obstacle or challenge and the lack of clarity as to whether they'll be out there in the field and be able to do work and have news flow for the rest of 2020 is weighing on the sector. And this is not something that's going to be fixed overnight. I mean, obviously a rising gold price helps. It helps a lot. It helps companies to raise capital and get more attention from investors. But this is something that's going to take weeks and months to build up confidence again and get investors to say, yeah, you know what? I want to buy that exploration stock, or I want to buy that mining stock. Also, the market may be concerned about the impact of an extended shutdown. So it's one thing to have a mine shut down for a month or two. It's a whole other thing to have it shut down for 6 months. I don't think there's a lot of mining companies that are ready or have the balance sheets to handle a 6-month shutdown. So we need to have some more clarity as to what's happening here in the world. Just because a company puts its mine on care and maintenance doesn't mean that it doesn't cost anything to keep it on care and maintenance. Like some of these mines cost $10 million a month to have shuttered. So the junior gold mining sector is up about 90 or so percent from its March low. So it's had a tremendous move. And I know a lot of people are saying, well, my stock is not up that much. But the fact is that this has been a pretty big rebound across the sector. And some stocks have doubled or more than doubled from their March low. So we can't expect too much. Yes, it was a big drop, but yes, it's also been a big rebound. And I want to make this point. So my view on the market, on the gold mining sector, so not just gold, but also silver. I'm going to show a few silver charts as well. Like my view, longer term, I'm extremely bullish. So if I look out 3 months, 6 months, a year, I'm extremely bullish on everything in the gold and silver space, essentially. However, I'm going to go through some charts now, and I'm going to give a slightly cautious view in the short term based upon technical analysis. And I think it's very important for investors to be clear on their timeframes. It's possible to be positive on something with a long-term outlook while also saying in the short term, we may get a pullback, and I want to buy that pullback. You don't have to have the exact same view on every time frame. And I think sentiment, this is something I felt on Thursday, I think sentiment in a lot of sectors, including the gold sector, has gone from extreme bearishness on March 18th to March 23rd, like that time frame where we're basically at the lows and things look really bad. Nobody wanted to buy anything back then. Like a lot of people might say they did, but I certainly didn't see it. We actually got to optimism last week. There's a lot of hope out there, and even some greed started to come in on Thursday. I started to see some chat comments and tweets where people are getting greedy again. And I even saw one investor say that gold could go to infinity. I would be very cautious with comments like that. I'm not sure we're going to go to infinity. It might go very high, but infinity is a big number. While the long-term macro fundamentals are very supportive for metals and mining shares, in the short term, I think there is still some cause for caution after the big rally we've seen in the last month. It's also time to focus on quality and value and not get sucked into the rising tide, lifts all boats mode of thinking. This is where charts and technical analysis are useful in helping us to avoid pitfalls at just the wrong time. So now I'm going to review some charts. So I'm going to start with the gold chart. So this is a daily chart of gold, and this is very simple. The number one thing is price. It rules everything. So I do use technical indicators, but price is my number one indicator. Gold closed at a 7.5-year high on Thursday afternoon. That is a bull market. We don't need to overanalyze the bull market. Previously, 1700 was a big level. This chart is of June gold futures contract, which is now the front month most heavily traded contract in the world. So we use that contract. This is June gold. 1752.80 was the closing price on Thursday afternoon. 1700 should now be support in June gold. And then obviously we have layers of support right underneath it, okay? Very, very strong chart, and I think pullbacks will be bought. The relative strength index is in a very nice spot here at 66, and this is something that I look at. I want to see the relative strength index on stuff that I'm long, usually around 60 or 70, maybe 75 on the daily time frame. Unbalanced volume. So one of the things I'm going to point out in a lot of these charts is the volume. We're seeing some volume divergences in this recent rally. I do not consider that to be a red flag. And by volume divergence, I mean the volume is not giving confirmation of new highs in a lot of charts. And I think there's a lot of good reasons for that. I think a lot of it has to do with the psychology of market participants right now. Because of the tremendous paradigm shift we've seen from the March lows to last week in terms of what the government response is and what the Fed and the European Central Bank are doing, people literally just took their sell orders out of the market. They're not interested in selling gold or silver or their mining stock portfolio, whereas they were panicking and selling everything they could at the March lows. Now, all of these offers have pulled back out of the market. And so in a situation like that, price can rise on falling volume. It's, in my opinion, as a technician, that's a yellow flag. It was not enough for me to become bearish on gold by any means, but it's something I want to watch going forward. And you can see that in the volume here. I mean, the volume has actually been relatively light, in comparison to the massive volumes that we saw in March. Silver is very similar. So again, the unbalanced volume is not giving confirmation of this rally. It's not making new multi-week highs like the price is. And I just drew some boxes here just to show you some levels that I'm sort of focused on. I think in silver, 1650 to 17 is, a level where there could be some, supply. There could be some sellers up there sort of halt this rally for a little bit. But if we pull back to $14.50 or $14, I think that would be a great buying opportunity in silver. Obviously, the silver chart is not as strong as the gold chart for a number of reasons, but mainly the fact is that silver is an industrial metal that has really suffered like zinc or copper has due to this crisis. Obviously, people do buy silver as an investment as well, but gold is much more of an investment, metal, relative to silver. I still like silver here. Technically, it looks pretty good, but I wouldn't necessarily just chase it at 1605 when it could run into some, selling up at 17. That's not a whole lot of upside, relative to the downside to 14 to 1450. And something that I said in my presentation that I think is really important, and this is something that I've been focused on with, my subscribers the past few weeks is you want to focus on quality right now. It's not time to go whole hog into the high risk stuff. Maybe you might have some of your favorite explorers that you really follow closely and you have a very strong reason why you want to buy them or keep owning them. But I think that we're not at that stage of the bull market in precious metals yet where all of the explorers are just going to go up and be 10 baggers. We're not there yet because there's still risk aversion out there. And even though a gold exploration stock is a gold stock, quote unquote, it's still high risk. And people are much more likely to buy Barrick or Newmont because these companies, I think they both have $3 billion in cash on their balance sheets. Obviously, they could raise money if they needed to at very low interest rates. There's huge free cash flow companies. They generate 6 million ounces of gold a year, and boom, the charts are just incredible. Both of these companies printed huge candlesticks on Friday, up 10%, up 13%. Clearly, the hedge funds, the big money, is buying these two of the biggest gold miners in the world. And then if we go down the food chain, the charts start to not look as good. So these are the number one and number two gold miners in the entire world, and they are getting all the money being poured into them, because of who they are and how strong their balance sheets are. When we go down the food chain, we've had big rebounds in Pan American, but now PAAS.TO is into some tall grass, I call it. I mean, this is not going to be easy for it to get through $27 area. It closed at $25.44 on Thursday. And obviously there's bearish divergence here in terms of the volume again. So this is a yellow flag. I wouldn't necessarily go and buy this silver miner on Monday morning. Kirkland Lake, big gold miner. Again, we have this divergence in the on-balance volume. Volume is not giving full confirmation of this rebound. This is something to watch. There's also a big resistance level overhead at 38, close at 35.86 on Thursday. So maybe it has another couple bucks of upside as long as gold stays strong. But then I expect it to probably halt its rally around the 38 level on KL on the NYSE. Here's Equinox. So this is a gold miner. It's a mid-tier. It's not a senior. But this looks really good. Look at the on-balance volume here. It's giving confirmation of this breakout from the pennant. The relative strength index is also giving confirmation of the breakout from the pennant. It's above the 50-day moving average. EQX.TO looks good to me, and I own this one. GDXJ. So here, this is another chart that I think is important to really look at, and this helps to show the situation across the sector. Look at where it closed on Thursday, right at the 50-day moving average, the falling 50-day moving average. Bearish divergence in the on-balance volume. So the volume is not giving confirmation of Thursday's big move, and we're hitting previous support from last year. So the GDXJ, I think, is going to have a little trouble here around the 36 level. This is not something I would just want to run in on Monday and buy because this exchange traded fund has gold miners in it. Silvercrest is another one. This is a head and shoulders top. It's at the neckline. It's retesting the neckline from underneath. Again, non-confirmation on balance volume. The relative strength index is at the median line. This is another one I wouldn't just chase and go buy at $8 on Monday morning. This could pull back again. This could pull back into the sevens, the low sevens, or even the sixes. And here's Novo. So this is an explorer. It's a big explorer. It's $400-some million market cap in Canada. On balance volume does not look good. Still inside this pennant. This could technically be called a bear pennant. It's under overhead supply around 220. Relative strength is not It's at the median line. It's kind of iffy. So this is just an example of how some of the higher risk stuff down the food chain in the gold sector is not rallying like the big guys were last week. And here's Great Bear. So again, I own this one. I love the story. The unbalanced volume is making new highs, but it ran into a level on Friday around 720 to 730. It's going to need some time to work through that. I think it will eventually, but we can't get too greedy. I mean, the stock at one point was up over 10% on Friday. This is a $300 million market cap. You can't ask for too much, So that's sort of all the charts I wanted to go through. And here are some themes that we're seeing. And I talked a little bit about this already as I was flipping through the charts. But obviously, it's a flight to the biggest gold miners with the strongest balance sheets. That's Barrick, that's Newmont. Also, there's clearly some the feasibility stage companies are in favor as well because they're not as affected by COVID because they're not out there, drilling. They've already done that work. And here's just a few names that are at this, feasibility stage that have had a big bounce off their March lows. I talked about this already. We don't know what the summer is going to, look like in Canada or the U.S. And yeah, so this is another thing. So this is the way that bull markets work in the mining sector. The seniors, the majors are the first ones to benefit, and that's what we've seen in the last few weeks. And then as the months roll by, investors become more comfortable going down the food chain into the mid tiers and then the explorers, right? So we're still in early stages in this gold bull, very early stages in my opinion. What will it take for a full-fledged bull market run across the entire precious metals mining sector? So this is just my opinions here. I think three things are going to need to happen. Obviously, we want a sustained move higher in the gold price to new all-time highs in US dollar terms. That would be the number one thing, number one catalyst. Number two catalyst would be some new discoveries, some excitement to stir the animal spirits and see some stocks go up, huge, like 10 baggers, right? And when we start to see that, then people are more comfortable to take more risk because they want to have a 10 bagger in their portfolio too. And then M&A, obviously, the seniors and even the mid tiers need to replace the gold that they've been pulling out of the ground day after day, month after month, year after year. And I think that we're going to start to see some M&A as 2020 evolves, as markets normalize. Obviously, with Barrick and Newmont each having about $3 billion or more in cash on their balance sheet, they have the firepower to make some acquisitions. So we'll have to see when that starts to happen. I think that when you see the first big acquisition, it will be very, very positive for the sector overall. So that is my presentation, exactly 30 minutes. And I'm now open to questions. Oh, okay, I see them. Do you see the gold-silver ratio coming down? And if you do, is it due to gold price dropping or silver increasing? The gold-silver ratio is really controversial thing. And I think that 120 is too high, historically speaking. I mean, it could certainly come back to 90. But I'm not one of those guys who think the gold-silver ratio has to be 60 or 50 or something. Again, silver is industrial metal. So until there's some huge paradigm shift about silver, that it's an investment metal and it's comparable to gold, then I don't see that ratio coming down under, let's say, 80 or 90. I think 126 is too high, and obviously that didn't last for very long. Which gold and silver miners are best positioned financially to weather this market? I mean, so just simply, I mean, Newmont and Barrick, just keep it super simple. These companies have huge amounts of cash. They throw off huge amounts of free cash flow. They are the biggest gold miners in the world. I think Barrick mines 5.2 million ounces a year. Newmont is like 6 million ounces per year. If you want to just keep it really simple, just stick to those two. I mean, obviously you could go down the food chain and take more risk and go for more upside. And I flipped through some charts. You saw the ones that I liked a little bit more than the others. I think Equinox is very good here. Yeah. And BRCLAD. Yeah, I don't really want to talk about super speculative juniors here. I mean, obviously, I do play in that field, and I own probably 20 super speculative, exploration stocks. But I don't really want to pitch those in this webinar. You can follow me on CEO.ca, and you can obviously see what I'm talking about on a daily basis. But my purpose of this webinar was to not talk about high risk stocks. Is there any concern with regard to the recent gold theft in Mexico, that is, stay away from Mexican exploration? Well, so Mexican exploration, I mean, theft in Mexico is nothing new. Let's put it that way. The heist that we heard about last week was pretty brazen, that's for sure. 5 heavily armed guys take over a mine, steal the concentrates, and then fly away in an airplane. That's a pretty advanced thing, and it seems like they've gotten away with it. If we start seeing more like that, obviously it's not going to be good for Mexico as a mining destination. But theft in Mexico has been happening since hundreds of years. It's nothing new. But like I said in the trading lab, I think that if this becomes a more regular problem, what insurance company is going to want to insure a mine in Mexico when they're just going to be taking losses every other month? So they need to get it under wraps to some extent, But I do own a couple of explorers in Mexico, not big holdings, but I do prefer Canada and the US for obvious reasons. And I think that's it. I don't see any, I think I got to all the questions. Okay. I think I answered them all. I mean, if you have another one, you could type it in now. But I think I said everything I want to say. And I hope you guys enjoyed it. And this is something that I think I'm going to do every month. So once a month, we might try it during a market trading day to get a little bit of a better turnout, and maybe to talk about some live, market action to spice it up a little bit. But this was a good first run, and I hope you got something of value from it. I enjoyed it, and yeah, have a good rest of your Sunday.